SoFi is going through a rough patch today, and I want to break down exactly what's happening, why the market is reacting this way, and what the data suggests moving forward. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The stock has taken a massive hit, dropping by 11.4%, and there's only about a minute and a half left in the trading day. The lowest point of the day was 10.93 cents, while the highest it reached was $12.17. This steep decline is primarily due to the market factoring in a potential recession, which has impacted multiple sectors. For example, airline stocks took a heavy hit as analysts issued downgrades across the board. Even Tesla wasn't spared in this wave of pessimism. On top of that, new tariffs have come into play, adding more uncertainty to the market. A 25% tariff on American agricultural products was introduced by China, and although it's not a game changer, it certainly adds to the pressure. Additionally, Canada is dealing with its own trade-related complications. The new Prime Minister, Mark Carney, took office yesterday, and while he is generally pro-trade, speculation about potential tariff changes created unease in the market. Some believe that political maneuvering might push Canada's administration to take protective measures, but at this point, it's mostly speculation. Adding to the tension, the Ontario provincial government, led by Doug Ford, imposed a 25% levy on electricity being sent to the U.S., particularly affecting states like New York. This move is expected to generate between $300,000 and $400,000 per day, with the revenue being directed towards local businesses and workers. While Ford may think this is a strategic move, the overall effect might end up backfiring, potentially leading to retaliatory measures. If history is any indication, Trump is likely to respond strongly, which could escalate the situation further. The market's reaction today reflects a growing fear of recession, and SoFi stock was not immune to the sell-off. As the trading day wraps up, SoFi is at $11.17 with a trading volume of 64.3 million shares, significantly higher than its 48.1 million average. Despite the sharp decline, there have been no new SEC filings or company announcements, meaning this movement is purely driven by broader market sentiment. One frustrating aspect of this situation is the lack of communication from SoFi's leadership. CEO Anthony Noto, despite being highly regarded for his intelligence and expertise, has remained mostly silent on the stock's performance. His only comment today was a cryptic tweet, "Fresh horses we ride." It's unclear whether this was meant to reassure investors or if it was just a personal remark. Noto often tweets about sports like lacrosse and golf, but when it comes to addressing concerns about SoFi stock, there's little to no direct communication. Investors would appreciate some acknowledgement or reassurance, especially on a day like this. That said, while today was bad for SoFi, things were even worse for Robinhood, which plummeted by 19.83%. This suggests that being more conservative in approach might have softened the blow for SoFi compared to some of its peers. Even so, the lack of engagement from SoFi's leadership remains a weak point, especially on what could be one of the worst trading days in the past 6 months or even a year. Despite the downturn, I personally picked up 50 additional shares today at around $11.24. It's not a huge purchase, but at these prices, I see potential for a rebound in the long term. Much of today's decline seems to be driven by fear rather than fundamentals. The short interest in SoFi stands at 12.33% of the free float, which translates to about 132.82 million shares being shorted. Interestingly, over the past week and a half, we've seen extreme volatility in the broader market, often leading to widespread sell-offs. A pattern has emerged where certain brokers, who usually pay people to short SoFi, suddenly shift their stance. Right now, the borrowing fee is at 0.26%, which deviates from the usual trend of being in negative territory. These shifts suggest that today's drop might have been an overreaction. Further evidence comes from the options market, where 49% of all contracts traded today were call options, indicating bullish sentiment. In total, the options market saw $48 million in premiums exchanged, compared to $27 million the previous day. Historically, when SoFi experiences this type of activity, it tends to bounce back the following day. Of course, there are no guarantees, but it's worth noting as a potential indicator. When analyzing the options data, it appears that bullish traders are targeting a price range of $12.50 to $13, while bearish traders are expecting it to drop below $10. Additionally, large transactions in the secondary market above $100,000 contributed to today's trajectory. The sell-off began with a significant transaction worth $5.63 million early in the day, setting the stage for more selling pressure. Other large transactions included a $6.16 million trade around noon, reinforcing the downward momentum. In the dark pool trading, multiple large transactions also occurred, though it's difficult to determine whether they were buys or sells due to a lack of bid-ask data. Given the price action, it's reasonable to assume that the majority of these trades were sales, contributing to today's bearish trend. SoFi closed at 11.17 cents, just below its key support level at 11.19. This makes it crucial for the stock to reclaim that level early in tomorrow's session if there's any hope of a recovery. If it fails to hold above 11.19 seen, the next major support is at 10.79 cents, followed by a psychological support level at 10.01. Given the current oversold conditions, a bounce is possible if broader market fears ease up in the coming days. However, if uncertainty continues to dominate, there may be further downside before stabilization occurs. Looking ahead, it will be essential to monitor how SoFi responds to these key levels and whether any new catalysts emerge to shift sentiment. Investors who bought at these lower levels may see significant upside if the market stabilizes, but in the short term, caution is warranted. Let me know in the comments what your thoughts are on SoFi's performance today. Did you buy, sell, or hold? Personally, I didn't go all in, but I saw an opportunity to grab some shares at a discount. While there's always a risk that prices could drop further, I believe the bigger picture still presents upside potential. However, market conditions remain unpredictable, and external factors like tariffs and political decisions will continue to play a role in shaping SoFi's trajectory. At the end of the day, it's crucial to keep a level head and not let short-term noise dictate long-term investment decisions. As we move into the next trading sessions, all eyes will be on whether SoFi can reclaim lost ground or if further dips are on the horizon. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.